the economy. In the headlines, President Trump sets a 20% tariff rate on the Philippines, higher than the initial 17% in April. Can investor confidence on the local economy continue to sustain gains in the stock market? Aaron Tsai of First Metro Securities joins us live. And more than half the Philippines' retail payments are now made digitally. We speak with Uno Digital Bank's Manish Bai. The United States has imposed a 20% tariff on the Philippines despite negotiations between the two countries. The new tariff will take effect on August 1st. The 20% levy is 3 points higher from the April 2 Liberation Day rate of 17%. The Philippines joins Japan, Malaysia, Brunei, and Brazil in seeing their import taxes tick up. The two-page letter addressed to President Marcos is identical to what U.S. President Donald Trump sent to other countries. Trump said the duties were necessary due to persistent and long-term trade deficits. The U.S. goods trade deficit with the Philippines stood at $4.9 billion in 2024, up by 22%. So starting August 1st, Philippine imports will be charged with a 20% tariff unless a deal is struck within the next 3 weeks. The rate is on top from other sectoral tariffs that the U.S. will impose. Philippine ambassador to the U.S., Jose Manuel Romualdez, tells Reuters, quote, "We are still planning to negotiate that down." Since May, government officials have been in touch with U.S. Trade Representative Jamieson Greer to discuss strengthening bilateral trade ties. The delegation is led by Special Assistant to the President for Investment and Economic Affairs Frederick Go and Trade Secretary Cristina Roque. Roque's initial goal was to bring down the tariff rate to zero. Palace Press Officer Claire Castro expressed optimism on Tuesday that the talks would yield a positive outcome. And analysts are already making sense of U.S. tariffs on Philippine goods and how Trump's decision will reverberate to the markets. Mark Angeles of First Metro Securities says the decision comes as a surprise, though the country's VAT might be a contributing factor. Angeles underscores that the 20% rate is lower than other Asian neighbors. Alfred Garcia of AP Securities stresses the Philippines should be more concerned on the indirect impact of the duties, as export-driven trading partners would be mostly affected by U.S. protectionism. Mike Ricafort of RCBC will be monitoring the next 3 weeks if Trump will chicken out or not, a reference to criticisms against him of being a taco, which means Trump always chickens out. And Gianpaolo Rivera of state-run think tank PIDS believes the tariffs offer a window of opportunity for the Philippines if it could quickly attract more manufacturers to invest in the country. We reached out to Secretary Frederick Go for his side, but he has yet to comment on the matter. And 7 other countries have received their updated tariff rates. Brazil's levies have increased by 40 points from 10% on April 2 to 50% this time. The rise in Brazil's duties is a form of threat as Trump complains of a witch hunt directed at former Brazilian President Jair Bolsonaro. Brunei also gets an increased tariff rate of 25%. Algeria's import taxes stay at 30%, while levies in Iraq, Libya, Moldova, and Sri Lanka have all ticked down. On Monday, Trump announced he also sent letters to 14 nations, and among them, Japan and Malaysia had higher tariffs compared to that issued in April. Meanwhile, countries such as Cambodia, Bangladesh, Myanmar, Laos, and Kazakhstan had lower tariffs. The president defended his decision to charge tariffs at what he deemed to be conservative levels.
The formula was a formula based on common sense, based on deficits, based on how we've been treated over the years, and based on raw numbers. And we really haven't had too many complaints because I'm keeping them at a very low number, very conservative, as you would say, number. And we haven't had, I'm sure they will be complaining at certain points, but we haven't had complaints. We've been treated very unfairly by both friend and foe.
Take a look at our own markets in the first hour of trading. Following President Trump's tariff announcement, the PSEI opens this Thursday higher by 0.1% to 6,511. The local bourse advanced for a third consecutive session, closing yesterday higher by 1.1%. The broader all-shares index increased by 0.8%. Most sectoral counters in the green except for mining and oil and financials. As for the Philippine peso, it opens today stronger, 56.48 to the dollar. The peso closed yesterday weaker at 56.57 against the greenback. And 10-year government bond yields were virtually unchanged, settling at 6.249% from the previous close of 6.241%. Well, with us now for more is Aaron Sai, consultant at First Metro Securities. Good to see you again, Aaron. Welcome back to the program. All right, I can't hear you there, but I know that you can unmute. How is the market taking the 20% tariff rate higher than the original 17%? I mean, about 3 months ago, we'd seen declines, but now at the get-go, we're seeing an uptick in the stock market and stronger peso against the dollar.
Yeah, so far the market is taking it well, no? I think the increase, no, the increase in the tariff, well, it was a surprise, definitely. We have been conditioned since the initial announcement of the 17% in several months ago. We were conditioned to either have that 17% max, no, or even lower, no, as the trade negotiations with the U.S. representative over the past few weeks, no. But for now, if we ask the market, no, at least for the opening, we have seen the market increasing now already, trading 20.2% up, no, and we see ICT, no, I think one of the major one of the companies that could have adverse effects, no, or that could be affected adversely, no, by this increase in tariffs, no, as we probably would expect a trade slowdown moving forward. The stock even broke out of major resistance yesterday and currently is trading 2% up today. So I think, and for now, no, at least for now, for this morning, it's possibly the market hasn't yet realized, no, the possible negative impact of the 3% additional, no, to the 17%.
Because this wasn't in your scenarios, 17 going to 20. So what are the negatives then when you talk about the non-tariff barriers? Because that's what really surfaced from the letter that was received.
Yeah, I think the non-tariff barriers, no, again, on its face, no, on its face, the tariff would be the bigger concern, or the biggest concern, no, at that, no, definitely the tax upfront, no, for Philippine export to the U.S. would be the more apparent, no, and the more immediate, no, the more immediate levy, no, to and more immediate effect, no, to Philippine exporters. But for the non-tax tariff, I'm not sure, no, I'm not sure about the possible development moving forward. As we know, if we are talking about taxation, as our head of research have said, no, the VAT, no, if that would be one of the major causes for this increase, no, in the tariff, then that would take a lot of process, no. It is a legislation, so there will be a lot of debates and a lot of politics, no, nonetheless. But we do expect that our trade negotiators, no, I think for the short term at least, no, more than the legislators, no, in this type of politics and political environment, I think would hopefully bring more positive development, at least for the short term.
Let's take it from the policy development, because there's also that angle of the VAT. The Philippines ranks the highest in VAT, and that might have had an impact on why the increment of 3%.
Yes, surely, no. I think, but again, if we look at the local benefit, no, as we have seen that VAT was legislated way back in the mid 2000s, no, 2005, I think, no, and we have seen the backlash to the political career of the authors, no, of this VAT. But as we have seen, over the years, no, from the presidency of Noynoy Aquino down to the current, no, we have seen the effect of the 12% VAT. No, yes, it is highest. No, but I think at that time, even up to now, especially now, no, that we are facing a lot more debt, no, than before. I think fiscal balance would also be a concern if the legislature would decide to make VAT as a negotiating instrument, no, just to lower the tariffs from the US. So I think if from my standpoint, now from my standpoint, if that is the only major concern, I think there would be more non-tariff barriers, if there are still no non-tariff barriers that can still be used as a negotiating instrument, no, to maybe lessen the 20% tariff. But if there's none already, if there's none already, I think we can take this in as again, we the business the economy, no, that is the economy has already been conditioned with the 17% tariff, no. So there will be an additional tariff, no. But again, I think what's hurting more, no, is the uncertainty, no, the uncertainty that this creates, no, 17% and then up to 20%, and then it was again moved to August 1 implementation. So there's a lot of uncertainty that causes some disruption in planning. No, that's why we are seeing some corporates even delaying or even reducing their capital expenditures on the forecast horizon. So if we can, I think, no, I think in my standpoint, if we can settle at for now, no, at 20%, no, and make the reduction if our trade negotiators would be fortunate, no, to reduce this to less than 20%. If we can just take 20% and move on from there, I think the planning would be more clear, no, and I think that would take off some overhang, no, in the markets as well as in the corporates.
So given the lack of clarity at this stage, is this likely in any way going to alter your forecast for the PSEI by the end of this year?
Well, for the PSEI, I think the more potent, no, or the more important, no, factors would be the risk premium, no, that the global markets would put into this additional tariffs, no. So if this additional tariffs, especially for U.S. trading partners, no, more especially on China, no, would result in China's slowdown and in turn global economic slowdown, then maybe, no, then possibly the global economic growth, the risk premium, the rates, no, the rates would go higher, the risk premium would go higher, global economic growth would go lower. Then more probably there would be a possible reduction in what we do expect, no, for the PSEI. But for now, I think again the market is voting, no, the market is voting that this might not be a concern yet, no. So I think the market is in a wait and see mode, no, at the very least, up to August 1, no, before it gets implemented.
Well, I think it's still up right now as we speak in the first 13 minutes of trading. But how is this changing the way you're structuring your portfolio by the end of this year? Is it going to change much?
Yes, for now, if we are talking about the big caps, now if we're talking about the big caps, those in the PSEI, as we have seen, the market has been trading in a very wide range, no, and just recently, no, we have hit the 6,600 midpoint of that range, no, and now we are 6534 as we speak, and I think we are possibly going to challenge, no, that 66, no, but. If again, if the market has already discounted all this macro news and we have been used to negative shocks already, that we have bottomed, even made a lower low at 5,800, if the market would probably get to focus more on the fundamentals and the valuation, and that's a big if, no, again, the macro factors are really potent in changing the wind, no, as far as the market is concerned. But for now, as we see in the market, it has settled at 6,200 higher low, no, and if it manages to break above the 6,600, then we have a better chance to go and at least reach the target at 6.9.
Right. Just as a final point, the peso, what role does it have in your portfolio and how things go with risk appetites?
Yes, for the peso now, we have seen a good developments with the peso. No, we have seen it appreciating over the past few weeks, no. But in the most recent weeks, we have seen with the announcement with the geopolitical crisis, we have seen it gone up, no. But unfortunately, as we can see from the chart of the dollar index, the dollar index is currently showing a bullish divergence, no. Possibly because of the positive sentiment that the U.S. investors have gathered, no, from the recent announcement. So maybe there's a bias towards expectation of US dollar appreciation, and that might hurt the Philippine peso moving forward. So if we can also see the chart of the USD PHP, we might be expecting for the near term the USD PHP to reach around 57 pesos, no. So there might be, we hope for a role reversal, no. 57.70 act as a resistance, no, for the peso, and hopefully that could cause the peso to appreciate moving forward. But again, as far as the market is concerned, no, as long as there's not too much depreciation, and as long as that we are seeing this market, no, as long as we are seeing this market moving as it was moving for the past few days and break above 6,600, then the view is more negative, more positive, no, than it is negative.
Right. Well, the peso is still stronger against the dollar and at 6,500 on the PSCI. Thank you so much, Aaron Sai, for all that context at the get-go. Consultant at First Metro Securities. And in corporate news, Philinvest Development Corp has secured regulatory approval for its 8 billion peso preferred share offering. The Securities and Exchange Commission favorably considered the Gutianan-led conglomerate's registration on Tuesday, though final approval from the PSE is still pending. FTC is planning to issue up to 8 million preferred shares at 1,000 pesos each, including an oversubscription option of 2 million shares. The offer period runs from July 21 to 25 with a target listing date on August 4th. FTC says proceeds will be used to refinance existing debt and fund long-term growth initiatives. You're watching Money Talks. The government says tariff on imported rice will stay at 15% as it balances inflation control with protecting local farmers. And Manish Bai of Uno Digital Bank talked about digital banking here in the Philippines. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The 15% tariff on imported rice will remain in place at least until November as the government continues to balance inflation control with support for local farmers. The Department of Economy, Planning and Development says the policy has helped stabilize prices, with rice inflation dropping 14.3% in June, the sharpest decline since 1995. The lower tariff, implemented under Executive Order Number 62, took effect in July 2024 and will be reviewed every 4 months to assess its impact. Farmer groups have petitioned to restore the original 35% rate, but the government says it explores more measures to support farmers, including giving access to the Rice Competitiveness Enhancement Fund. Lawmakers are now reviewing a draft bill to restore the National Food Authority's market functions, including price regulation and buffer stock management. And U.S. markets have edged higher yesterday, Wednesday, following a raft of tariff announcements from Trump, including a 50% levy on imported copper and 200% duty on foreign-made medicines. The Dow rose by about 0.5%, S&P 500 climbed by 0.6%, and the Nasdaq ticked up by 0.9%. Nvidia briefly hit the $4 trillion market value in yesterday's trading. The AI chipmaker, however, settled to $162 per share, up by 1.8% for a market value of $3.97 trillion. The rally in Nvidia shares caps a remarkable run and comes barely 2 years since the company notched a $1 trillion market valuation. Meanwhile, benchmark 10-year Treasury yields ticked down to 4.31%, and gold prices edged higher to $3,318 per troy ounce. Bitcoin is nearing an all-time high of $112,000, bolstered by an increased risk appetite and persistent institutional demand. The cryptocurrency touched a record peak of $111,988 and was last up by 0.4% at $111,259. Since the year started, Bitcoin has advanced over 18%. And taking a look at U.S. futures, we're pointing to slight declines when the markets open later tonight, Manila time. Both the Dow and the S&P are down by 0.1%, and the Nasdaq falls by 0.2%. And it's looking like a mixed bag for Asian markets in the first hours of trading this Thursday. Both Australia's ASX 200 and South Korea's Kospi are both up 0.6%, and Japan's Nikkei is down by 0.6%. More than half the country's retail payments are now being made digitally, marking a milestone toward a cash-light economy. Data from the Bangko Central's 2024 Stages of Digital Payments report showed digital transactions accounted for 57.4% of total monthly retail payment volumes and 59% of value. These figures mark an increase from 52.8% and 55.3% respectively in 2023. It also surpassed the 52 to 54% target set under the Philippine Development Plan. Staying with the Philippines' digital payments journey, our next guest urges the creation of a national alias directory where every mobile number can be linked to a bank account for real-time transfers. With us now for more is the founder, president, and CEO, Manish Bai of Uno Digital Bank, the first fintech company to obtain a digital banking license from the Bangko Central. Good to see you, Manish. Thank you so much for joining us.
Thank you, Cathy, for having me here. Pleasure to be here.
All right, so what do you make of the digital payments report? It's quite an improvement from last year.
I think BSP has done a phenomenal work in terms of promoting digital payments. Like if you go back to 2020, coming out of COVID, the governor had set himself a target of hitting 50% payments digitally by 2023. BSP surpassed that in 2023, and as we see right now from the current report, almost 60% of the payments are now digital. Not only that, maybe this headlines doesn't do justice. When you go deeper inside, you see the PesoNet rails, you see the InstaNet or InstaPay, or you see QRPH. There has been growth everywhere, especially QRPH, which has more than doubled, which is phenomenal for the growth of the economy and the GDP per capita as well.
Yeah, it's phenomenal growth, but when you dig deeper and look at the unbanked and the underbanked, and the reason why you set up Uno Digital is because you wanted to be inclusive.
Absolutely.
To what extent has that been addressed, or is there still a huge gap when we talk about financial inclusion?
There has been positive trajectory. All these statistics points to strong development, increase in number of bank accounts, increase in financial accounts, increase in percentage of payment. But the question to be asked is, are we doing enough? Is there more which can be done? And Philippines today is on the cusp of a great explosion. We have seen that mobile-first economies are the one who are shaping the future of the globe. And Philippines stands out there where digital adoption is taken very, very positively. So I think there are a few steps which can be done further, especially when you look around in the region. the neighbors around Asia, rest of the world, which can take this to the next level. It's not only about the percentages. Yes, 60% is a great number, and that will continue to grow. But how to take the stock up? Today, if you see into this report, talked about 3 billion payments which went through digital mechanism. That's a great increase. But how do we take that 3 to 100 billion?
So how do we do that then? I mean, you are proposing a national alias database, which we've already seen being implemented in jurisdictions like Singapore, India. I mean, what difference would it make, and what is it about?
I think the next step is to make the payments more convenient, more transparent, increase the user experience, and give them comfort around security. And we have seen this work in Brazil, in Mexico, in India, in Singapore, in Australia. So purposely, I'm like trying to touch the different centers of globe. What this does is it really empowers an individual to make a payment by simply typing the other person's mobile number. Today, there has been a bit of resistance to payments. Yes, the adoption has been good, but what we need to do is possibly push for enablers which will take it to the next level. So let me take example of Singapore out here. Today, after they introduce a mobile-to-mobile kind of payments, which is interoperable with the entire network being connected, around today 80% of the people use that, and the total usage is around 80. Just so I give you the context of India in terms of numbers, in 2017, monthly payments was around 100 million. As of May, it is 18 billion. So now, if you look at in global context and numbers, today Philippines is 3 billion. And say if I use any country, let's use India. India has gone 170 billion. So it's a scale of 60. And that's the scale which is very much achievable out here by having.
Yeah, again, when we talk innovation, we do talk about the need for safety and security, and you touched on that point. Given the SIM Registration Act and the resulting lack of trust, if you will, how can we go around that and convince the Bangko Sentral that this will be a safe and secure way of seamless financial inclusion?
Absolutely, very relevant. Today, if you see, when you go through your eKYC and in the banks, you already have your mobile number out there. The national alias, it talks about having a centralized directory. And that needs to be in a government institution or government endorsed institution. Say, for example, in Philippines example, it can be BankNet. So there's a centralized base, which is very, very secure, where all this registry is there. So that safety aspect from the regulator point of view comes from not handling this data to kind of any private institution, but having it controlled. Just like you today the data of InstaPay or PesoNet is very, very secure. What it does for the individual level is actually creating it more secure, because it has been proven globally that transfers based on mobile numbers are less prone to errors for individuals. Take an example of a common sari store owner or anyone who's transferring money every day to multiple accounts. Mm-hmm. It's prone to much more errors. Whereas if you know someone with whom you're dealing every day and you are just transferring the money by putting that mobile number, it's much more safe and secure.
Okay, well, let us know how the Bangko Sentral reacts when you propose this this innovative measure. Thank you so much for joining us.
Thank you.
Manish Pai of Uno Digital Bank. And the global dance phenomenon Burn the Floor kicks off today at the theater at Soler, running until July 15th. The show brings high-voltage performances featuring classic styles like the waltz, tango, cha-cha, and jive, infused with modern energy and intensity. With a 27-year legacy and tours in over 180 cities worldwide, Burn the Floor has been dubbed the toughest dance company in the world. Presented locally by GMG Productions, Burn the Floor Ballroom Reinvented promises Filipino audiences a theatrical dance experience with no fear and no boundaries. A dance to that. That's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow at 9:30 a.m. here on One News. And we're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.